I do not own the rights to this music. Come in, come in, come in. We are going to have a quick live tonight. Happy Tuesday, everyone. Come on in. Got you coming in. Welcome on Instagram and Facebook, YouTube. Welcome. Come on in for another Tax Talk Tuesday with Tawana. I am going to try to get my I'm going to say it again. I do not own the rights to this music, just in case it picks up some of the sound. Come on in. And y'all forgive me. I had to take my glasses off. That ring light. I don't know how to get that glare off without that big circle showing. But we are going to start Tax Talk Tuesday. 1 second. Y'all know I can't see right. But come on in, come on in, come on in. There are more to taxes than just self-employment tax, entrepreneurs. Did you know that? So when you decide that you're going to start a business, yes, we have two tax systems in the U.S. The one for the poor and uneducated, and then the one for the business owners and those who are educated, in the fact that you can get benefits, tax benefits, from having your own business. We are getting started here, and I wanted to talk about that a little bit, because sometimes as an accountant, tax professional, because every accountant is not a tax professional, every CPA is not a tax professional, every enrolled agent does not do taxes. Some only do tax resolution, but they don't always do taxes. So I want to talk about your 1 second here. I want to talk about the fact that there's more taxes than just your self-employment tax. So we always talk about that 15.3% and you wanting to save on your taxes and being able to write off expenses as a business owner, right? So let me introduce myself really quick. For those of you who do not know me, I am Tawana with Bryant Business Solutions, a full-service tax and accounting firm based out of Columbia, South Carolina. However, I do handle all taxes in the U.S. But I wanted to, I'm trying to get, y'all, sorry. Trying to kind of, there we go. Let me get that shared real quick. There we go. All right. So, hi from France. Merci beaucoup. Y'all, that tells my age, right? Pee Wee Herman. But anyway, I am based out of Columbia, South Carolina. I'm super excited. I love educating on tax and accounting and just education, period. I believe that the people suffer from lack of knowledge. And a lot of times, if we're not in that specific industry or we're not in that specific field of study. So for example, if I am a real estate agent, I'm not studying the tax laws. I don't get excited by studying the tax laws, but you have geeks like me who will like get engrossed in it and get excited about learning the new things or the nuances or the or having tax talks or discussions with their colleagues or with their peers. It excites us. Just as someone who does makeup, they get excited by makeup. I'm learning, but they get excited about that. So you have me here now who's willing to share the information that I learned so that you can in turn be educated as well on things that I see when I'm doing strategy calls, or things that I learn from my clients, or some of their myths or some misconceptions about some things. So one of the areas that came up for me this week that just kind of, as I was talking about it, just kind of frustrated me a little bit, is the fact that we don't want to pay any taxes, but it pays the cost. You have to pay the cost to be the boss, right? We've heard that. You have to pay the cost to be the boss. So when you file your taxes, we're in tax season right now. When you file your taxes, you will see a line item for your federal taxes. That's the main tax system that we're on. You will see a line of another form for your state taxes if your state has taxes. Okay. There are several states, Florida, Texas, several states that do not have any taxes. So they won't see that state tax, but they may have taxes in another higher in another area. For example, Texas has higher property taxes. We're going to pay tax in another area one way or the other. Okay. So we focus on that 15.3%. We focus on that area. What if I am a W-2 wage earner only? Well, Tawana, my taxes shouldn't be this high because I have a business, right? Not necessarily. It depends on what tax bracket you fall in. The difference is, though, as a business owner, you earn your money, right? You purchase your expenses, and then you pay taxes on what's left. As a W-2 wage earner, you earn your money, you pay your taxes, you live off of what's left, okay? But it does not mean because you're a business owner, now you're exempt from, at minimum, federal taxes. Your federal taxes have to get paid, right? So I just want us to manage our expectations. In some states, they now have also local and city taxes. When we get up into Massachusetts and some of those others, mostly a lot of times I see it in the northern states, northeastern states. You will start seeing local and city and other taxes for your tax return that goes along with your tax return. Now, what if I have a business? If I have a business, well, Tawana, can I be an S Corp and I can avoid these taxes, right? Well, as an S Corp, we're not going to get with the social media hype. We're not going to jump into an S Corp because that's what's hot right now, right? It's going to have to make sense. As a LLC, I do recommend for your protection, everyone, registers their entity, but sometimes that's not even most beneficial. But as an LLC, your information is passing through from your Schedule C on your tax return, and it passes through to your 1040. Okay. And that's where you'll see your W-2 wages. You'll see your IRA, your retirement. If you take money from that, you'll see that there. And then if you have a loss, then it reduces those other that other income. But your employer is paying half of that 15.3%. So that's why you may feel like you're paying less or you're paying more because you're paying it by yourself. But if you have an S Corp, the company now pays the 7.5% and then, or the half, and then you are paying the other half as you would if you were a W-2 employee. So you're still going to see it. You're just going to see it in a different way and at a different rate. So that's why I want us to manage our expectations and not just jump on bandwagons of what's hot right now, what's popular right now for your taxes, in managing your expectations of what your tax responsibility is. If you have a tax professional that is educating you on these things, kudos to them. But remember, tax preparation is compliance work only. I can't stress that enough. They are not required to give you the rundown. They're required to ensure that you're compliant. They're required to, when you hire them as a tax professional, we are required for just tax preparation services. We're not required to consult. That's another service. We are not required to provide you with tax strategy. That's another service. But I want us to really get realistic in managing our expectations. Of course, I encourage everyone to become a business owner. I encourage everyone to take advantage of the other tax system for those who are business owners and they're educated about taxes or the benefits that come along with being a business owner. But remember, there's cost involved. You need to pay an attorney when you're setting up your business. You need to pay an accountant or a tax professional, someone who can advise you properly in the structuring of your business and how you set that business up. Make sure you're consulting with both. It's worth it than additional fees down the road for being structured incorrectly, or for the structure not making sense or benefiting you as the business owner. Okay. Like I said, I didn't want to come on long. I just wanted to come on and just chat up about that briefly, just because I'm seeing it, and I'm seeing where we're shocked. We have sticker shock when we get the liability that comes along with taxes. And then even as an S corp, now you need to have payroll. You need to have a reasonable salary. A reasonable salary is not $100. What would you earn if you were to do what you're doing for someone else? What would your salary be? Reasonable compensation. Now, let's say you say, oh, well, my salary should be $100 a month. Well, so that means you're on them people job and ain't doing no work, and they should be paying you $100 a month. All right. Let's be realistic. Let's be true business owners. Let's put on that entrepreneur hat, and let's be responsible business owners. Let's be responsible taxpayers, and making sure that we're not trying to hide anything. We're not trying to, because everything comes back. It really does. Everything comes back. I know the IRS specifically will sit back and just watch you. They'll just sit back and wait. Sometimes they'll send that notice out to say, hey, you owe more money. And I will say this, it's not that the IRS is ever wrong. Make sure you're opening your notices. Make sure you're doing it timely. Make sure if you're getting someone else to review it, or there's something that they need to do for you, you're doing it timely. Okay. Make sure you're doing those things, and you're opening your mail. I know I had a friend laugh at me because I opened the mailbox. It was one of those postcard things. I stuck it back in there and I walked off. Remind me of Fred Sanford when he puts everything back in the mailbox. Let's not put the IRS notices back in the mailbox. Let's be confident in the fact that they may just be notifying us or something, or if it is something that is truly an error or mistake, it could be their mistake. I have made a call that it was in fact their mistake, and they still wanted the client to fix their mistake because someone overlooked something. It happens. Remember, even though we have a lot of computerized systems and a lot of automated systems, we are still humans looking at things as well. So just wanted to hop on with that quick tidbit. Did not want to be on here long. It is, in fact, tax season, but I want to honor what I say. And we have Tax Talk Tuesday with Tawana. That way you can hop on, get your questions answered. If you have any, anybody got any questions, drop them in the chat so that I can assist or direct you, however. But didn't want to be on long, just wanted to hop on and provide you with that tidbit of information. Remember, there's more to it than self-employment taxes. There are other taxes, there's other responsibilities that we have, be it administrative costs or whatever additional cost it is to be the boss. But make sure that you know and understand going in what those responsibilities are. All of the information may not be available. And then remember, the information that you receive from someone is from their knowledge, their training, their studying, and someone else may have additional knowledge. I won't say more knowledge, a different type of knowledge. So, have a backup, I guess, to the information. Fact check if you have to. Make sure you do your due diligence, though, as a responsible business owner. All right. Well, I will be signing off. If you need to get your taxes done, our books are open. Be sure to tap the link in my bio, and we will be more than happy to assist you with getting your compliance completed. If you need other services, tax planning, CFO services, you have to qualify for that. But if you need CFO services, consultations, we're here for you. Okay. Bookkeeping, make sure your books are current. All right. If you need it, we got it. Just click the link in the bio and click either the discovery call. Then we have a specific link for tax preparation only, so we can get you onboarded quickly and get your taxes done for you. Do not wait until the last minute to do your taxes. There are deadlines. Do not wait until the last minute to do your taxes. Be sure that you get them in timely so that there's enough time for someone to thoroughly look at what you have and get them processed. Okay. All right, signing off. I will see you guys next week. If not before then, of course, I love my reels now. You'll see me in my little reels, and I will see you next week. If not, bye bye.